Traders, it is Sunday, March 22nd. I hope you're all hanging in there. I hope that you're all practicing social distancing. The coronavirus is obviously impacting the market right now, and the entire country is shut down. I am going to show you a really nice trade, so I hope you hang in there for that analysis. But I want to also review what's happened, what I think will happen, show you some of the trades that we did from an investment standpoint, and then show you a nice new trade that you might want to consider. So I'm going to take off the buy and sell signals, although you can see on a weekly chart, this is a weekly chart of the SPY, really nice buy signal in there, gorgeous sell signal in there. Oh yeah. Anyway, I'm going to take those out because they tend to obscure the chart a little bit. So those are our proprietary buy and sell signals available on multiple time frames. You can use it for the index or for individual stocks. But I see this low right here as being a pretty significant technical breach. This is the low from December 2018, and you can see how we closed below it on Friday heading into a weekend. Everybody's super scared. You've got many states across the nation who are shutting everything down. It's just the essentials. Gasoline, pharmacy, food, those stores are open. Everything else is being shut down to knock down this growth curve on the coronavirus. And I expect to see that continue over the course of the next week. This week could even be a little bit more gloomy because the news is reporting that the virus is spreading at an accelerated rate. Well, we don't really know that. The virus has been around for a long time. We simply haven't tested for it. And now that the test kits are going out, we're just trying to establish the base. The same thing happened in South Korea, China, Italy. We need to establish that base. Only then can we start to measure how quickly the coronavirus is starting to spread. So it's going to look like it's spreading like mad over the course of the next week, and that is going to spook a lot of people. So hang in there. The bad news is not done yet. Now, the coronavirus itself, there's some promising news. I've been talking about an anti-viral cocktail that's been discovered in Thailand actually about a month and a half ago, and now that news is finally making its way here. Two readily available drugs, Z-Pak, which is an antibiotic, and something called hydroxychloroquine, which has been used widely. It's 20 cents a pill. It's been FDA approved. You heard President Trump talk about it last week. They don't know if it's the answer, but they're going to start ramping up production for it. Mylan Labs, Teva Pharmaceuticals, they are ramping up production of it so that people that are in the hospital that are not faring well can at least get on the drug. Now, it's been 100% effective in small studies that I've seen, so this could be a game changer from a virus standpoint. I think everybody staying at home is also going to help incredibly, but this is not going to repair our economy instantly. That could take a year before we get back on our feet, but hopefully this will give people hope, and hopefully within the next 3-4 weeks or so, everything gradually starts to recover. People gradually start to go back to work once the virus is contained. The warmer weather should help. We don't know for sure that it will, but it should. So I think that the darkest period has yet to come, and it'll be this week, and then everything will start to improve very gradually. The other thing is that people will see that there are lots of coronavirus cases, but our own immune systems, for the most part, have been able to fight it off. This does present a really good opportunity for us. You know that on February 20th, from a swing trading standpoint, we were 100% in cash. Along the way here, I have tried to dip my toe in the water on some bullish put spreads, but in each case, once I put the weekly video out, I canceled those orders immediately, just did not want to take advantage of it. But now the prices are so compelling that yes, in my last swing trading video, we did take action. I want to take action. I want to buy some of these stocks that are just incredible values at a deeply, deeply discounted price. Does that mean that I'm buying these stocks right here, right now, today? No. I want to take advantage of huge option implied volatility. And so here's a daily chart of the S&P 500, and you can see the waterfall event. And there's the 100-day moving average, there's the 200-day moving average. We blew right through that. We are going to see some more weakness, so expect that. But let's take a look at the VXX. And the VXX measures option implied volatility. So when the uncertainty is very, very high, option premiums explode. You can see they were at historic lows, and part of the problem was asset managers were not buying put protection. They assumed that the market was just going to keep going higher with all the central bank easing, and the coronavirus popped up, black swan event. Now we get this gigantic spike up to 76 from probably a $12 level. Option premiums are outrageously expensive, and we are going to take advantage of that. So, how do we do that? Well, we start taking a look at fantastic stocks like Google, Twitter, Facebook, Cisco. I'm going to show you. This is from the chat room. I put the video out Wednesday night, and the video was to sell the Twitter April 17th, meaning they expire on April 17th, 1 month from now. The $15 puts we were going to sell for 75 cents. The Facebook April 17 $100 puts we're selling for 201. The Google April 17 650 puts we sold for $6. The Cisco April 17 30 puts we sold for $1. This is not me. This is members in the chat room who acted on the video that I posted Wednesday evening. Now, midway through the day on Thursday, I released it to the public on YouTube. My weekly swing trading videos, I typically wait 2 or 3 days before I release it, but I knew there was no way that anybody would be able to get in on these trades, so I wanted to show you the logic and the rationale behind these selections so that you could start looking for some of these stocks yourself. That's why I put it out there early on Thursday. Typically, I would release it Saturday. So let's take a look at each one of those and see how those are faring. So first, we're going to go into the Twitter trade. And there's a reason that I picked Twitter. And that's in that previous video. If you haven't watched it, please do. There's a lot of good information in it. As I mentioned, I'm going to show you a trade in just a few minutes. We're going to review these trades to see how they're doing. So in essence, when you sell naked puts on a stock, you are saying, I'm drawing a line in the sand. I will buy the stock at this short strike price that I'm selling. So in the case of Twitter, that short strike price was $15. I will buy Twitter at $15. Please give me the opportunity to do that. And if I cannot buy Twitter at $15, then I am going to get a consolation prize. And in all of these instances, that consolation prize is generating anywhere from a 12 to a 20% return in a month. So let's take a look at it. The $15 puts on Twitter that we were able to sell for 75 cents Thursday morning, they are 18 cents bid, offered at 49 cents. Can we get 75 cents for it now? Nope. That trade is working in our favor. Take a look at the next one. We've got the Facebook April 17 $100 puts. By the way, all this research is available in Option Stalker. There's the $100 puts. They are 85-cent bid, offered at $1. We sold them for over $2. You're not going to get that price now, and that's okay. It's a really good trade. Take a look at Facebook stock. Facebook is at $155. Think about it. Would you buy Facebook at $100 if you could? Of course you would. And you've got to put up, because it's a $100 strike, you have to put up 20% of the strike price. Actually, your margin requirement will be less than that, but I like to use it because it'll give me plenty of cushion in case the stock does start to move against me. So if it's a $100 stock and you got to put up $20 and you're bringing in 2, that is a 10% return in the course of the next month. If I can't buy Facebook at a 33% discount, the stock would have to fall from $150 down to $100 in the next month. If it does not fall down to $100 in the next month, I'm going to generate a 10% return. With interest rates at 0%, where else are you going to make money like this? This is a very high probability trade. That's what we're looking for right now. So this is not day trading, which we do a lot of day trading, and we've done great day trading this market. Now I'm starting to dip my toe into the water with some swing trades. We are 100% in cash. We're trying to deploy some of that cash. We're trying to generate some income on these very, very high probability trades. Option Stalker helps me find them. I'm going to find one for you in a few minutes. So, Google. Google is around $1,100. So we were selling the April 17 $650 puts. So we'll go to the 650 strike price. You can see those are 85 cents bid, offered at $4.60. Wide bid ask. You've got to have the order out there working. You got to know what price you're willing to take for it, because you're going to see these mile wide bid ask spreads. You're not going to be able to go in and pound a bid. Not going to happen like that. But if you had the $6 offer working Thursday morning, you betcha we got filled on that. Can you get $6 for it now? Not going to happen. So Google would have to fall 50%, 50% in the next 4 weeks for this trade to for us to get assigned. I don't want to say for this trade to get into trouble, because I want to buy Google at $650. I want to buy it for half of where it's currently trading. And if I can't, I'm going to be able to keep that $6. So in essence, on a one lot, one contract, I'm bringing in $600, but I do have to put up $13,000 in this case because Google's such an expensive stock. But it generates a 5% return in the course of a month. That's 60% annualized. Where are you going to find that kind of probability and that kind of return? You're going to find it by doing this strategy and by looking for these types of stocks. Let's go into the stock ER in Option Stalker. Google has $174 in cash and very little debt, and they won't be impacted much by the coronavirus. I think they could be positively impacted because people are going to be searching the internet more and they're going to be watching more YouTube. And this is the type of analysis that I include in my videos. So let's keep going. Let's take a look at the final one, Cisco. Internet usage up 40% since the coronavirus. So what does that mean? That means you're going to need a lot of switches and a lot of routers, and that's exactly what Cisco makes. So here we were selling the April 17 $30 put for $1. 72 cents bid, offered at $1.04. Could you get $1 for it now? No, but this one actually doesn't have to move too far for us to be able to get that. Cisco closed at $35. This stock can lose $5.50 in the course of the next 5 weeks, which is about 12 or 13%, and you'd still be okay on this trade. And this is going to generate a really nice return. So there you've got another great play that still might work, meaning you still might have a chance to get in on Cisco. Let's take a look at that balance sheet very quickly. Stock ER shows us Cisco with $6.38 in cash, $4 in debt. They could easily pay that debt down. Why am I so focused on cash? I want companies who can weather the storm, because right now they're all going to go through a cash crunch because business came to a screeching halt. And that's why companies like Carnival Cruise, United Airlines, a lot of the hotels, they've got a lot of debt. And when you instantly cut off that cash flow, it's going to be hurting. They're going to need bailouts. These companies that I've shown you, they're not going to need any bailouts. So how do we use Option Stalker to go in and find trades? Well, I'm going to go into custom search. I'm going to click on that. And by the way, while I'm describing all of this, know that in the course of the next couple of weeks, I'm going to have Option Stalker. I'm going to have Option Stalker Pro. Option Stalker will be geared for Swing traders, people who are looking for investment opportunities to hold them for a few days, possibly a few weeks. And so Option Stalker will be available on a monthly basis, on a quarterly basis, or you can save a lot of money by subscribing to it on an annual basis for $499 a year. When you see all the research that's available, this is a slam dunk, and it includes the weekly swing trading video. Some people may just want the swing trading video. That comes to about $10, less than $10 per video per week. If you look at these videos and you don't think you can make $10 on the information in them, then you should take a pass on this offer. But I think most of you are going to see the value in that video and go, that alone is worth the subscription price. Not to mention everything I'm about to show you right now. So we're going to go in, we're going to be looking for stocks with liquid options. We have our own proprietary way of finding those. So I'm just going to put this at 0. 0 being the low, 15 being the high. And I'm going to look for a stock that was higher than the prior day high. Well, why would I want to do that? Well, think about it. Friday, the market closed dramatically lower. So we've got the market getting absolutely buried and taking out that December low from 2018 right there. We closed below it. A stock that finished higher than the prior day's high, and look at the selling on a 5-minute basis on the SPY. A stock finishing higher than the prior day's high tells me it's got relative strength. That's why I want to use it in this search criteria. Then I'm going to add one other simple piece of information, which would be show me a stock that is strong relative to the S&P 500 on a daily basis. So I'm going to click scan, and then we're going to see what we've got. These are all qualifiers. And so now what do I do with that information? I'm going to put this off screen. Well, I'll slide it to the right here because all I have to do is double click on these symbols to look and find the stocks that might be appropriate. CCL we mentioned. Well, CCL we don't want to have anything to do with. I'm going to go to that daily chart because this company has a ton of debt. Carnival Cruise Lines. We're going to go into the stock ER. And then you'll be able to see, yeah, look, they've got 76 cents in cash and $22 in debt. Yow, they could be in trouble. I agree. So I'm going to pop up that search matrix one more time, and we're going to just click through, and what we're going to be looking for is really good fundamentals. So I'll go into CHNG. We'll just do this, and you can see how everything updates, and you can just click through. And it won't take you long. Click, click, there's the next one. Click, click, there's the next one. All right, now I'm going to cut to the quick because I've gone through this. This only took probably 5 minutes to knock through this list and look for companies that had a lot of cash on their balance sheet. Z might be one, Zillow. Zillow, no, unfortunately. I mean, they're an internet-based company, but they do have a fair amount of debt, so I would pass on Zillow for right now. But they do have the type of business model that I would like. CRWD, high PE ratio, but they still got a decent amount of cash on their balance sheet. I'm going to go right down to SHOP right here. Shopify, cash per share, $21. Debt per share, $1.45. What do they do? Well, we can read about it up here. They basically have e-commerce that they supply to all sorts of merchants on the internet. So they help them set up that e-commerce site and they take a percentage of revenues. Really, really good business model. How could I find out more? All I had to do was click that little button down below here and look, I could see their last earnings report. And this tells you that their earnings are growing at a very fast rate. Their revenue growth is 47% year over year. Their recurring revenue growth, meaning they're going to make this money, it's a subscription-based model, is part of their revenue source. It's going to continue to grow at a big rate. I think it was up around 37%. So anyway, this company is growing at a very fast clip. Yes, it's got a very high PE ratio, so that may make it a little bit iffy, but this company is really gaining traction. I think Online commerce will continue to do well even in the coronavirus as we start getting back on our feet. They don't have a lot of fixed overhead costs. They don't have a lot of debt per share. I believe their employees will be able to work from home and set up a lot of these merchants. So they should be able to get back on their feet right away, generate a lot of cash. Really, really high growth rate of 47% year over year. Okay, I'm interested. I'm very interested. So, do I want to buy SHOP here? Nah, not so much. Not with a PE ratio like that. Heck no. Well, let's zoom out to a weekly chart. Okay, so you can see, look at that chart. I mean, people like this stock. This thing is really, really going. So, where would I like to buy this stock? Well, let's see. It's got really strong support here at $300. That's 46 points away. That's a 10% move. Yeah, that could be pretty good. I wouldn't mind buying it there. Long tails under body. Okay, yeah, I could see maybe I'll consider selling a 300 put, but man, this market, Pete told me that it's going to sell off next week, and I should really try and play a little bit safer than that. Maybe we'll go down to the $250 strike price because look, that is the 100-week moving average. Okay. Yeah, that'd be pretty good. 100-week moving average, 250. That gives us a lot of room. Stock could lose $100 in the course of the next month, and I still wouldn't be buying it at $250. Or we could play it really safe and go down to the $175 strike price, which is 50% lower than the current stock price. This stock can drop 50%. All the great things that this company has done over the course of the last 2 years, you'd be able to buy it right back here at the starting line if you got assigned at $150, and you'd be able to scoop it. Even though it's got all this good news and all this fantastic momentum, you wouldn't have to pay up for it. You could buy it right down here at $175. So let's take a look at what that $175 put is. And let's go out to April 17th. So April 17, $175 put. Actually a pretty tight market on this. $2.65 bid, offered at $3.60. So let's say that I'm able to get $3 for this particular put option. Okay, I take in $3. I would be obligated to buy the stock at $175 as a put seller. Obligated. I don't get to choose. I'm obligated. That's the nature of selling puts. Okay, so that's all right. I hope I buy it at $175. Please, please give it to me at $175. I'd buy it with both hands right now. But we may not be able to. Time may tick away, and if I can't buy the stock at $175, I'm going to get a consolation prize, and that consolation prize is going to be $3. So I'm going to have to put up some margin for this, and so let's calculate what that margin is, and I'm going to clear this out, and we'll take a look at what this return might be. So I've got $175, and I know that I'm going to have to put up 20% of the strike price. So let's calculate that out. Okay, so I've got to put up $35 per contract when I sell these options. Okay, so I'm going to be bringing in $3, and I'm going to divide that by $35, which is the margin that I need to put up, and that is going to generate an 8.5% return for me in the course of a month. Where in the heck are you going to make 8.5% in the market right now with this kind of probability? Is this stock going to drop? Is it going to be halved in the next month? I don't think so. I really don't think so. And if I get a chance to buy it at $175, I'm going to snap on it. Annualize that return, multiply it by 12. That's 100% return if you can find more plays like this. Now, you can't go in willy-nilly looking for just any old stock and using this strategy. You have to be very, very selective, and the things that you need to look for, you want to be in social media type stocks, internet based stocks, companies that are able to have their employees work from home, work remotely, companies that won't be impacted by supply shortages from China or anywhere else. So I think internet based companies are the way to go. And then you have to look for these balance sheets. You have to look for that cash. Who can weather the storm? Then you ask yourself, is this the kind of company that I would want to own? Yes, I would. Let's say that you get assigned at $175. You would need to be able to put up half of that strike price to buy the stock outright on Reg T. So you would need to have about half of that money, so figure 175, somewhere in the neighborhood of $85 per share, you'd have to be able to put up if you got assigned. But you're going to have lots and lots of time to think about whether or not you want to buy that stock and what's happening in the market before you actually get to that point. Is this stock going to hold that $175 price level with the 200-week moving average there and this compression here from a year and a half ago? Yeah, I think so. To me, this is the kind of play that you want to be doing. This is a slam dunk. We want to be taking advantage of very, very high option implied volatilities. Look at that VIX soaring right there. We want to capitalize on this. So, that's the play right now. Why am I selling naked puts? Because I don't want to do put credit spreads right now, because that means that I'm having to also buy expensive option premium to create that spread. And I'm probably going to be tempted to over leverage and do too many of them. But selling naked puts keeps me honest. And it also is more of an investment strategy because I just have to look at that short strike price and know that I want to buy the stock at that price. So I'm going to be looking for more plays like this. Let's take one last look at the S&P 500. I think that we're going to have a pretty soft week here. We're below that support level that we saw. I believe that in the course of the next week, it's going to get as dark and gloomy as it will over the course of this coronavirus. And then we start seeing the light at the end of the tunnel. I like that treatment that's available. I think we're going to see that distributed in a big way to hospitals so that people who are suffering from coronavirus have a better chance to recover. I think that's going to provide some optimism in the market. I think people are going to look around and know other people that have had it, that have been able to fight it off. All these things are going to help, but the economic damage is going to take us quite a while to recover from. So, if you are a swing trader, if you're an investor, please come in. First of all, take the 2-week trial. By the time your 2-week trial is over, I'm going to have my new website up, and you'll be able to see that you can get Option Stalker with that weekly swing trading video for $499 a year. It's a bargain. $10 a video. If you didn't even use all the tools in Option Stalker, it'd still be a great deal. And I haven't even talked about all the earnings searches and all the other variables in the matrix. They're incredible. They are incredible. The other thing that I can do on a chart instantly is I can see earnings past, present, future. So if I hover over Shopify, I can see that they announce earnings on May 5th. See that? Just hover over the E, the last bar on the chart. So on May 5th, that means that these options that I'm selling with an April 17th expiration date, they will have expired before earnings announcement, and that's what I want because I don't want that additional earnings risk. So this is just a great trade all the way around. Take a look at it Monday morning. For those of you who are looking to deploy some cash, great trade. If you like this content, please give it a thumbs up. Please subscribe to my YouTube channel. Turn on your notifications. I promise you there'll always be some really great trade ideas in each video and lots of education. Hang in there. We got about another gloomy, gloomy week. And then I think opportunities start to surface in the market and we could start taking advantage of some other plays as well. But for right now, I love selling naked puts. on these really, really strong stocks that have to fall 33% to 50% for us to even run the risk of assignment. Thank you. Have a good weekend.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.